Welcome. For years, many of us have viewed home equity solutions through a reverse mortgage lens. That's understandable. But not every homeowner is looking to eliminate their mortgage payment. In fact, according to the New York Federal Reserve Bank, each year over 1 million Americans 55 and older opt to get a HELOC or traditional refinance loan. During the same period, only 26,000 got a HECM reverse mortgage. That's over 1 million older homeowners who are tapping their equity every year. Why? Because some borrowers are comfortable making a payment. Some are uncomfortable with the idea of a loan balance growing without making payments. Some only need funds for a specific purpose. Some want to preserve as much home equity as possible. And some simply do not see themselves as reverse mortgage borrowers and never will. These homeowners still need solutions. That's where EquitySelect enters the conversation and will help you close more deals. Home equity lines of credit have been a financing tool for homeowners for more than 40 years. They've helped millions of borrowers access the equity they've built without selling their home. But the traditional HELOC was originally designed for working-age borrowers with steady employment income, not for retirees or those approaching retirement who often have substantial home equity but a more fixed monthly cash flow. That's the gap EquitySelect was built to close. EquitySelect is a revolutionary new home equity loan offered exclusively by high-tech lending, designed specifically for those entering or already in retirement. But first, let's discuss the importance of learning what the homeowner is trying to accomplish. To do that, listen for any of these telltale signs during the conversation. Is the homeowner dead set against reverse mortgages? Are they uncomfortable with the idea of never making a payment? Do they only need a limited amount of money for a specific purpose? Do they have substantial equity and strong credit? Do they have enough cash flow to support a modest monthly payment? Have they been turned down for a traditional HELOC or cash-out refinance because their debt-to-income ratio was too high? Do they want to preserve more equity for their heirs than a reverse mortgage would? Now that you have a clearer picture of when homeowners may be more inclined to choose EquitySelect for its flexibility and low payments, here's one way to explain EquitySelect in terms the homeowner is likely familiar with. That is by contrasting EquitySelect with a traditional HELOC. To keep this simple, let's compare two homeowners with the same interest rate. One using a traditional HELOC has drawn $200,000 from the line of credit, and the other uses EquitySelect to draw $200,000. With a traditional HELOC, the required monthly interest-only payment on a $200,000 balance would be approximately $1,500 per month. With EquitySelect, the required maximum monthly payment could be as low as $459 per month. That's more than $1,000 in cash flow preserved each month. The takeaway is this: a traditional HELOC requires a full interest payment every single month. However, EquitySelect gives the borrower control over how much they pay each month. If expenses are high and cash flow is tight, a minimum payment can be made and any unpaid interest is simply added to the loan balance. In other months, the borrower may want to pay the interest payment or any amount they choose. That's crucial flexibility for retirees with a fixed income, especially when unexpected expenses crop up. But one of the biggest differences comes later. Many traditional HELOC borrowers focus on the initial payment or credit line and overlook what happens after the draw period ends. After 10 years, a traditional HELOC typically recasts into a fully amortizing loan, meaning the borrower now is required to make a principal and interest payment. In this example, that monthly payment jumps from approximately $1,500 to nearly $1,800 per month. For homeowners near or already in retirement, that kind of payment shock can create significant financial strain at a stage of life when income is often fixed and unexpected expenses are more likely to occur. This is often a moment of realization for homeowners who now see the risks of a traditional HELOC. With EquitySelect, that recast never happens and the required minimum payments remain capped for the life of the loan. No payment shock, no unpleasant surprises. But let's step back and talk about what happens before a HELOC closes. The qualification stage. Lenders qualify HELOC borrowers using a debt-to-income or DTI calculation. That is the homeowner's monthly debt payments versus their income. The required monthly HELOC payment a lender enters into that calculation isn't based on the interest-only payment, but on what the fully amortized payment will be after the draw period. This higher payment has a major impact on how much of a credit line the borrower may qualify for, or cause the application to be declined. However, because EquitySelect uses a much lower required payment, homeowners may qualify for a significantly larger line of credit or may qualify when they wouldn't with a traditional HELOC. There is one more piece of flexibility worth highlighting. At application, an EquitySelect borrower can elect a higher maximum required payment. Choosing a higher payment cap allows the borrower to qualify for an even larger line of credit. The borrower decides what fits their situation. That choice is built into the product. Let's recap. With traditional HELOCs, you have higher required monthly payments, a potential payment shock after 10 years, and more restrictive qualification due to debt-to-income ratio guidelines. However, with EquitySelect, you have lower required payment flexibility. No recast spiking monthly payments, lower required payments making DTI qualification more likely, and a payment structure of their choosing. Your job isn't to only sell reverse mortgages. It's to better understand the homeowner's goals, concerns, and preferences, then recommend the solution that best aligns with those needs. If you do that, you'll become more valuable to the homeowner, and you'll close more deals. EquitySelect can help you turn more no's into yeses.